Welcome to Ask a Tax Lawyer with Lance Drury. Attorney Drury represents individuals and businesses in disputes with the Internal Revenue Service and answers your questions about dealing with the IRS.
Lance, what is an offer in compromise?
An offer in compromise with the Internal Revenue Service is a vehicle where a taxpayer who owes liability can submit an offer to the IRS which is less than the full amount of the liability owed in full satisfaction of their complete debt with the IRS.
Is it complicated?
Well, it can be if you try to do it on your own. The statistics that the Internal Revenue Service compiles show that if a taxpayer tries to submit and have an offer accepted on their own, the odds of being accepted are only 10 to 15%. However, if they employ the services of a seasoned tax professional, those odds go up to 60 to 70%. And I think part of that reason is that there is a lot of financial information to compile, and a lot of taxpayers don't submit all the financial information that is needed by the IRS to determine whether or not the offer should be accepted or rejected. In addition, it's very formulaic, it's very mathematical, and a lot of the taxpayers do not complete that aspect of the offer in compromise properly. And the other thing is there's two different types of an offer in compromise. One's what they call their lump sum. It's not actually a lump sum. It's payable over 6 months. So, for example, if you submitted an offer in compromise for $10,000, you would spread that out in equal installments over 6 months, which comes out to $1,667 per month. But there's also what's called a periodic payment plan, whereby it's spread out over 24 months. And the mistake that I see a lot of taxpayers make, some practitioners, is that I think there's one of those methods that's far preferable to the other, and I don't see that a lot of taxpayers or practitioners are doing that. And the one that I think is far preferable is the periodic payment plan, because under that there's no provision for equal installments. So I have my clients pay $100 a month, and then in the 24th month they'll make a balloon payment, so to speak. And the reason I say I think that's preferable is it's going to take a minimum of 9 months for the IRS to accept or reject the offer. Well, I don't really trust the IRS. So the problem with the lump sum is they've already got all their money pursuant to the offer. So they have no real incentive to accept the offer because they've already got all the monies that have been submitted. So there's no reason for them to accept it. They can reject it and go after the taxpayer for additional monies, because all the money submitted in the offer, if the offer is rejected, the IRS will keep. It's not going to be refunded if it's rejected. It will go towards your tax liability, but that money is lost. You do the periodic, takes 9 months. You spend maybe $1,000 on the offer. If they reject, you're only out $1,000. But the IRS has every incentive to accept that offer because their pot of gold is down the road. So that's why I think the periodic payment plan is much better for the taxpayer to do.
So how does one qualify for this?
Well, it like I said, it's very formulaic. It's not just a question of calling up the IRS and saying, hey, let's settle for 10 cents on the dollar. It doesn't work that way. So the people that truly qualify an offer, it will be people that have not a whole lot of equity and assets. Obviously, if you have $1 million home, and you have a lot of equity there, you're probably not going to qualify for an offer in compromise. And also people that have low income. So one of the trade-offs, they did liberalize the rules pertaining to offers in compromise. Historically, only 15 to 20% of taxpayers, their offers were accepted. Now that number's up to about 40%. But the trade-off was that when you do the offer, you're relegated to the national standards. And if you're not familiar with the national standards, for example, the IRS compiles categories of expenses for different expense items. So, for example, housing and utilities. Every county in the United States has a different standard for housing and utilities. So let's assume we're talking about St. Louis County. Let's assume for two people it's about $1,500 a month. If you've got a $3,000 mortgage payment, the IRS doesn't care in the offer that you're exceeding the national standards. You're going to be relegated to the national standards for the offer. So that was one of the trade-offs. So people that have, high expenses like that, it's going to be a little tougher for them. But generally, the people that do best with an offer are people that don't have a whole lot of equity and assets and are more lower income rather than, say, somebody makes $150,000 a year.
Okay, that makes sense. Now, tell me, how long does this process take?
Well, from the time that it's submitted until it's accepted or rejected is a minimum of 9 months. And invariably, it will take much longer. And it's a lot of paperwork because when you submit the offer, you have to submit all this financial documentation. It's voluminous, lots of bank records, lots of documentation concerning expenses. And it sits for 3 or 4 months because there's a huge backlog. And the IRS has basically cut back on a lot of its employees. And so you don't hear from the IRS for probably 4 months. And then an offer specialist is assigned. I believe they have 45 days from the time it's assigned to them to contact the taxpayer or their representative. And so when they call me, the first words out of their mouth are, you have to resubmit all the financial information because we need to see if your client's financial information has changed since they submitted the offer. So it's a lot of paperwork for not only the practitioner but also the taxpayer because you're basically sending in this voluminous amount of financial information twice to them, and then you'll go back and forth and negotiate. They'll have other information that they may want based upon reviewing the initial documentation that you send to them. And so that's why the process takes so long. But it will take a minimum of 9 months, and I've seen it take much longer than that. They do have 2 years. If they don't make a decision with 2 years, then it's deemed to have been accepted by the IRS.
Oh, okay. So the takeaway is you know what to do, and it's not easy.
It appears to be easy for people, but, my experience has been that the vast majority of the time when people fill out financial information, they don't do it properly. It's confusing, it's complicated for the average individual because they're not used to doing that. So, yes, I think you need a seasoned tax professional to prepare the offer and compromise if you want to get it accepted.
So what happens if the IRS rejects the offer?
Well, if the IRS rejects the offer, you do have the right to appeal that determination, and then you'll get a second bite of the apple with an appeals officer. And my experience has been that you're probably going to get a better deal out of appeals than you are with the person who's initially reviewing the offer and compromise. And then the other thing is, like I said, okay, if appeals rejects it, then, the IRS is going to keep all the monies pursuant to the offer, and then you have to start the process all over again.
What about state taxes?
Well, I'm only familiar with the state of Missouri. I'm not licensed in any other state. So I'm not familiar because every state has a different procedure. But in the state of Missouri, there is a vehicle for offers in compromise. Now, they're not quite as flexible as the IRS. The state of Missouri is pretty rigid, and they don't really care. I mean, I had a client once with 6 kids. Him and his wife didn't make a whole lot of money. We submitted an offer for like $20,000 on a $55,000 liability. His father was going to get a loan for him, and they came back with $40,000, which we obviously couldn't do, especially when you're trying to raise 6 kids. But the Missouri Department of Revenue really doesn't care if you have children to feed or you have other responsibilities. They just want their money. Now, they are a little more lenient on income tax and state tax. Basically, you submit an offer on sales tax, all they're going to forgive is the penalties and interest. There is more leeway when you're dealing with income tax, and the case I cited to you was a sales tax case. So if this had been an income tax case, they probably would have been more lenient with my client. But again, it's a little harder to get an offer in compromise accepted at the state level than it is at the federal level.
Thanks for listening to Ask a Tax Lawyer with Lance Drury. Attorney Drury represents individuals and businesses in disputes with the Internal Revenue Service. Join us next time as he answers your questions about dealing with the IRS. Attorney Drury's website is lancedrurylaw.com.